In this segment, we want to go through how to actually sign into the investblaze product for the first time. If you look up here, you will simply go to app.investblaze.com and you'll get the welcome screen. Here you want to decide, we gave you the option to create your initial portfolio either based on percentages or in dollar amount. And we were thinking you might want to put in an existing one first off and just take it right off your statement, so the dollar amounts might be a cleaner way to get started. So we'll do that right now. Once you get into it, you can pick either one. So you're not forced one or the other. You have the option going forward. So you'll come in and you'll come into here, and this is what the screen looks like initially. If you notice up here, it says the risk assessment to determine your investor profile. Everything about investing should be customized to your preferences, to your risk tolerances, to your goals, etc. And the beginning of that is to determine what your investor profile looks like. So if you click on this and start, I recommend you do this before you even put in a portfolio. And it'll ask you a series of questions, and you can go through here and you will answer them all, and it'll come back and give you an idea of what your investor profile looks like. So in this case, I'll just go through one, and then you can go through the others as you see them. But it's an example of which of the following statements best describes your objectives. Now, your highest priority is to preserve your investments, and you're willing to accept minimal return to do so. You just don't want any risk at all. If you click on that, then you would go to the next one. I personally am going to fill it out for me, so I want significant appreciation in my investments, and I'm willing to accept higher degree of volatility because of that. And then you'll go through this. I'll say my investment horizon's 3 to 5 years. If there was a 15 to 20% decline in the stock market, I would not sell. I'd consider it an option to buy more. And how soon would you need your investments to recover? I would love for it to happen in 0 to 6 months, but I would want it to in 1 to 3 years. And so the stock market involves risk versus reward trade-offs, which best describes you. I'm going to pick the last one. I'm willing to accept more volatility in order to attempt to outperform the market. And take your time, look through all these, kind of pick your answers. And so when you're done, it comes back, and the way I answered it here, it says I'm a moderate to aggressive investor. And what happens with this is it gives you a really good sense of what you want to look for in the app in order to judge the performance of different stocks and funds and how it looks in your overall performance of your portfolio. The key component of all of this is the upside downside capture. Now we'll explain that later. I'll give you a real quick one right now. It's basically saying if the market is up a certain amount, with the upside downside capture, your portfolio can be expected to go up accordingly. So in this case, you want to capture 100% of the upside with only 80% of the downside. So you're actually you want to achieve market returns, but at a less risk or less volatility than the overall market. That's a pretty common one. The most common of all is an 80 over 60, which is you want some growth, but you don't need the whole market growth because you're not willing to have as much risk as it takes to do that or as much volatility. So an 80-60 is where most people will fit. In the way I did it here, it's 100 over 80 in the moderate aggressive. This can be 125 over 100, meaning I want to shoot for the moon. I'll take the total volatility of the market as long as I outperform it. So you can see these here and where they are and what those upside downside capture numbers look like. And the other thing is you have the option to retake this assessment, so you can clear it or you retake it and see what happens the next time. Because typically the first time you take it, you don't really understand all the questions and the answers. I think they're pretty straightforward, but they can certainly change as you use the tool and understand and make decisions. You can go back going, yeah, I thought I was a conservative person, but really I'm moderately aggressive, or vice versa. So you always have the option to retake it. And again, that's important because you kind of want to manage your portfolio to whatever upside downside capture you come here. So I'm going to say that's good for now. I'll be moderately aggressive. And as you can see up here, it keeps it up here and it shows where I am. Now we'll talk about these quadrants later, but essentially the upper right hand quadrant, you can see on this radar screen, the upper right hand quadrant says you're an aggressive investor. And so if you see a stock that fits up here, it fits in the aggressive quadrant. If you go counterclockwise, this becomes moderate. Then down below, the lower left, you can see is conservative. And then over here is the danger zone. And the reason we call that, some value stocks are there. And if you're a value investor, you may want stocks that are there. But for the typical investor, the description is that you're underperforming the index with higher volatility. And personally, I don't want any part of those types of stocks, and I don't want my portfolio to reflect that. So we call that the danger zone. So, and this SPY right now, the SPY stands for S&P 500. It's the index that we use. It's an aggressive index. Many times you'll look at people that compare their performance. You'll talk to a financial advisor. They put it together and says it outperforms the index, where their index might be something much less performing than the S&P 500. It could be the ACWI, which is basically a worldwide market. It could be a bond index. So just saying that a portfolio you put together exceeds or outperforms an index isn't good enough. You need to make sure you're comparing apples to apples and using the same index every time. Down the road, you'll have the opportunity to declare a different or designate a different index, but for the initial release here, we're using the S&P 500. With the thought process is, if you're not going to outperform it with either by earning more or less volatility, then why not just go with the S&P 500 and take your lumps along with the market? And there's lots of pros and cons to that. We'll get into that later. But that gives you essentially a feel for what this radar screen looks like and how it maps up here to yours. So the moderate aggressive, you'll see the two dots. So you'll want to be in the upper half of this radar screen with your type of risk assessment. So that stays there. When you come down below, when you hover over this, you see this box gets highlighted. This is where we add our initial portfolio. So for the sake of discussion, I'm going to say that I have Amazon, Google, and NVIDIA, just to pick three. I'm going to come up and I'm going to say, because these are dollar amounts, I'm just going to say I have $10,000 in each of these for a $40,000 portfolio. Now, when you start with one, if you use the tab, it'll take you right to this. It doesn't make you go through anything else. You don't have to highlight it. It's a very simple process. And we think that's the easiest way to input the information. So I now have this. You can see my portfolio is $40,000. It's equally weighted in 3 stocks and cash. So I can actually look and see what each of these look like, and we'll get into these later. It's not a bad looking portfolio at all. And you'll see down here, you'll have a total what the portfolio looks like upside downside capture. And it's also reflected up here in larger numbers so you can see it. And if you hover over these, it'll explain what the upside downside capture is. The first time through, you may go, I don't really remember what he told me. So you can hover there and read it again as a reminder kind of thing. And you can kind of go through each of these to see. And what you can see from here is your portfolio is all green. When I hover over here, you can put another portfolio in, either new percentage portfolio or a new dollar amount portfolio. And if you come back away, then you can see that the portfolio you have is here. So you have an option for many, many different portfolios. And we'll show you later why that is significant and important. But that's what we wanted to accomplish in this first segment: how to sign in, how to take your investor profile, and how to input your initial stocks or funds to take a look at a portfolio.